I'll take this opportunity. Welcome everybody back into the Independent Investor Channel live stream. Super glad to be with you guys here for the last live stream, kind of closing out the summer and the springtime. Been on a pretty good streak. We put out this product very frequently, and we do that to foot stomp the importance of making sure that we're using the power of social media to get to those folks that need to be gotten to. If you're one of the, out of every two people that don't invest, it's a slight majority, about 55% of the people out there have some form of stock market exposure, whether it be through their employer or whether or not they own stock as a layer in their portfolio or layer in their strategy. Then that's great. But if you're not one of those people, and I say that investing isn't for everybody out there, but I think there's a lot of people out there that really could benefit. It really could help streamline your discipline a little bit in your day-to-day application. A lot of the wealth in that statistic is held by the people who make over $100,000. So the reason why I'm so adamant about pushing out this message is that it becomes a lot easier for people, even if they're a little bit undisciplined with their application, to identify that surplus capital, right? I aim to advocate for those people who need to have an advocate, okay? Who need to have some representation in the game and say, you know what, anybody out there that's making less than $35,000, the statistics are staggering. It drops to about 19% of those people who are low income earners actually participate in the market. Why is that? And a lot of people are going to come back to me and say, well, that's because we don't have any money, right? And I beg to differ. I think there's probably some work that could be done on the discipline side. I would go so far as to say that those are the very people that need to invest. Those are the people that need to be operating on a little bit more frugality in their application and how they spend and how they make decisions about how they deliberate. Start to get some goals aligned for yourself and start to meet those goals, not just set them up, but meet those goals. Who cares if it takes you longer? Okay. So to identify and advocate for those people out there that may fall into that category of not investing at all, or maybe even falling under that category of, let's just say, less than $100,000. I've never made over $100,000 in my entire life, and I am a blue-collar salary worker. So I fit into that mid-range of representing a lot of people here from the sample community. I want workers in my group. I want subscribers out there who come to the Independent Investor Channel and feel like I can relate with you. Now, the channel's open via social media to all parties that want to come in and talk financial stewardship, etc., a little bit more spending discipline, and yes, maybe some ideas on strategy on how you can make some sense out of the stock market. That's all good and plenty, but my message really does aim to get to those people who really need this message. They really do. And I contend that if we stretch far enough and we put that out there enough for people to really relate with people and say, you know what, Ryan says I can take a couple of dollars and put that to work for myself. He says it's okay if it takes a while to build up a little bit. But I'm tired of being down. I'm tired of being in that statistic of people that don't participate in wealth building. Right. I kind of have an idea of what's going to happen if I don't participate. Maybe I should start asking myself the question of what would happen if I do participate in a wealth building strategy for me and my family. I'm kind of a selfless person. I work for my family. Okay. There was just one person in the thread who I hold in the highest of regard, and that is Mr. Bob. He's in here every single week, just an absolute devout subscriber to the Independent Investor Channel, and an ambassador for the message of taking, in whatever capacity you choose, ownership over your own money. But he was talking about, alluding to you'll be rich in the future if you do end up seeing your career through. I want everybody out there to look at their strategy as being valuable in and of itself. You can be that $35,000 a year earner and still look at those buckets of wealth as being strategic buckets of wealth. It doesn't necessarily have to come in the form of a large number. Okay. We always want to differentiate between the pursuance of wealth and making sure that by nature of engaging in a wealth building strategy for yourself, that it is in fact only wealth and wealth alone that you're looking to achieve. Okay. It's not going to be the achievement of a huge number that's going to provide you happiness in this life. It's the God's honest truth. It is, of course, an opinion that I foot stomp all the time. I do that for a reason. I don't mean to impugn those folks that are going for that large number or trying to become that millionaire. Yes, you will indeed be wealthy. Okay. But I think there's more to it in that the pursuance of wealth doesn't necessarily mean that you're achieving real happiness in life, real meaningful relationships in your life, okay? Real spiritual actualization, the ability to set yourself apart amongst your peers, right? Be a little bit self-regulating in your application. Freedom. It's one of the things that I responded to Mr. Bob, who's a good friend of mine, man. He comes on every now and then and he talks to me behind the scenes. And it's very, very refreshing to speak to that generation who's been there and done that, who's worked and earned that very thing that I feel like isn't a pursuance of wealth in that capacity. It's the ability to say, wow, I've got some, I'm content. I'm content with my life. I'm free now. I can do what I want. I've earned that right. And I think that's a really amazing thing. And I think, unfortunately, in this environment, there was some comments in the thread here about this stock market right now. It's on an all-time high. That's wonderful. I typically don't get overjoyed, just like every pundit on the TV that's coming through and trying to get people fired up on investing, because if the market starts to show some signs, and we had that just as early as Monday, it seemed like a long time ago when the market at one point was down 900 because all of a sudden the variant Delta has come back into the world and the world's going to hell in a handbasket. And if you pay particular attention to what they're trying to sell you through the social media, not necessarily social media, but definitely mainstream media, it's almost become predictably laughable anymore. And that's a big reason why I actually shut that crap off and I don't watch it anymore. I'm much more of a happy person away from at least the mainstream media. And then my social media engagement really is codified during this 60 minutes on YouTube through the Independent Investor live stream, because I get to engage with fantastic people. I see some of them in the group. I see David Oldenburg, who's just popped in, my good friend from the West Coast, David Mathis. I got Becky in the group here, who's just an absolute sweetheart. So great to see you guys, and many, many more. I've got Frame of Mind here and Financial Options. We are going to spend some time getting to some Q&A. So if you have something that's absolutely burning, throw it in the thread here. I will try to get to most of that this evening. You might be kind of surprised by my perspective on this deal, because unlike a lot of common groupthink in investing, I'm not one of those fellas that buy into that. And I don't do that to be a cynic. I don't. I just really do, quite frankly, disagree with a lot of the application that's put out there, because there's a fine line between putting out propaganda because it is elegant to do so, but when it is looked at as far as its usefulness in nature, it becomes a lot less elegant. And I question whether or not people really are tuning into social media to really get those granular answers to their question with regard to wealth building. And I would encourage each and every one of you to identify what it is that you want out of this opportunity for you, not anybody else in the thread, not anybody else out there, in answering the question of why it is that you do this. Okay, because investing in its purest form is the pursuance of wealth. Okay, not the pursuance of happiness. Really want you guys to differentiate between that. I do want to roll out a special treat for you guys. We'll kick off the Friday live stream. Welcome. We'll allow everybody to get in here, make yourself comfortable. I'm actually having a celebratory drink this week, as per my 16 years, actually. And it's gone by so fast, and it's just been an absolute honor, really. I was explaining today how there's never been a day for 16 years that I haven't woken up and been happy to go to work and serve in the capacity that I do, because there was a certain time in my life where I was void of that, and it's all I ever wanted. So welcome to you guys. It's going to be an awesome live stream. Stay tuned, and we'll get right into it. Bit of a homage to the company that's like a sleeping bear in the portfolio. Actually, it's a neon green sleeping bear. So it'll be a lot of fun. We're kind of at a neutral place in the stock market. We had our passive investments obviously do very, very well with the market at all-time highs here. But before we get into the portfolio reviews, I do want to earmark some of the separation in your mind while I've got everybody's attention. I've got 50 strong in the live stream, and each and every one of those 50 in here might hear something that I say that can really resonate with them. The title of this live stream is Save versus Spend. And I want you to ask yourself what side of the fence you're on. Are you a saver? Are you a spender? I would say that in all actuality, to help with that answer, there's probably a lot of people out there that are a little bit of both. And this will help you kind of draw a distinction whether or not you're super frugal or you're somewhat reckless on the other side of the spectrum. So that'll really kind of help you justify the investing opportunity, because the more you can lean toward that frugal application when you're looking to justify and put value in saving versus the spending element, okay, the better off you'll be. And I think when we draw that distinction between those two, very, very simple things. And I think all too often we don't take a few seconds to say, man, that's all I do is spend. I don't save anything. At the end of the month, the paycheck is absolutely dissolved away. And I find myself with a gap period between waiting until the spending is complete, until I've got that inject again in the paycheck and I can continue to spend again. But I really want to draw that distinction and kind of where you are along that continuum of comparing those two equal forces. I think when we're talking about financial discipline 101, really the financial stewardship application for yourself. Second thing, when we start to get into the deliberation, is the comparison between buying stock, the actual buying stock. What are you buying? You can Google this definition a lot. There's 500 YouTube videos on what you're actually buying when you're buying a stock. What I find interesting is the difference between the purchase of the stock and the justification of purchasing said stock when compared to buying stuff. How many of you guys put a ton of value in stuff? How many of you guys can earmark 5 things that you bought 5 years ago and you still have, and you have the same level of conviction in that purchase after 5 years than you did the day that you bought that item? I think you would probably struggle with naming 5 things. A lot of you guys are out there thinking, yeah, okay, I got them, Ryan. I got my house, my car. I'm struggling. It's important to really think about those things. And when we think about the stuff in our lives, and we start to think about the ability of that stuff to survive over the long term. In other words, what's its longevity factor? I think it's amazing when we start to analyze, even within a 5 year time frame, how most of the stuff that we have either ends up on eBay, or worse, ends up in a garage sale, or maybe even ends up with a donation to help somebody less more needy than we are out there. And that's all great. But the distinction between the stuff and justifying the stocks out there, stocks over time do nothing but get more valuable. Now, there's those anomalies, and investing does come with it some risk, right? And that's okay. But when we look to draw the distinction between whether or not you're a spender or a saver, okay, and whether or not you're spending all the time to justifying the stuff, I think you'll quickly realize that it's really an exercise in futility, and that there's really nothing that's going to come out of that over the long term. In other words, we have that shot of dopamine when we do end up buying that item. It's exciting. We might use the item for a couple weeks. I used 5 years, but I think a lot of you guys probably would struggle with saying, those things that you got that have really stood the test of time. And dare I might say, take those same 5 items, if you were able to even come up with 5, and say, which out of those 5 items are worth more now after 5 years, and exempt yourself from the house. I'll give you one for credit. The house is probably one of those very few things on that list that has the potential over the long term to appreciate in value, right? But it is one of those two things that I put in that investing category that has the ability to actually make people more wealthy the longer you hold that asset. It's a beautiful, beautiful thing. So when we differentiate between the two, I really think that's super important. All right. The discipline versus the delusion. This is another really interesting comparison between these two. I think when you're looking at your discipline, I think a lot of people want to buy into, well, time in the market is better than timing the market. In other words, if you just invest and you just hold for your entire life, you're going to end up in a place that's better than where you were when you started investing. I agree with that philosophy. I'll give you a little bit of a takeaway, a little bit of a nugget. This is from my own personal application, and there's going to be some people out there that may disagree with this. That's totally fine. I think there's a lot more out there that is available via the stock market, available and accessible by each and every one of you guys. There's no the stock market doesn't it doesn't keep people away that want to participate. In other words, if you justify this game and you want to get involved, you absolutely can. The amazing part about it is you can get invested for the long term, and that's what I think everybody should do to start. Do I think you should stop there? I really don't. I think you should at least entertain the opportunity of putting a multifaceted discipline in place for yourself. Okay. Let me give you an example. If you wanted to do the employer sponsored, go ahead and do it. Then start to ask yourself, hey, Ryan mentioned this Roth IRA element for myself. Start it for yourself. If you have a spouse, start that. Start the layering up. Ryan talks about savings all the time. When we declare the portfolios tonight, do you guys, you're going to see that I'm in my biggest cash rich position that I've been in this year. A lot of people are going to say, well, you missed the run up in Google today. I did. I did. And that, would I've rather been in the stock? Yeah, but I don't really think about the stock market that way. I was just telling somebody this week, I said, I used to play 21. I used to gamble a little bit. Now it makes no sense to me, because I can win almost 100% of the time in the stock market just by nature of the ability to control when and how I cash in my chips, right? So it just makes sense to me. I don't get married to a stock, that's for sure. Remember, my pursuance of wealth is singular to my pursuance of wealth. My application isn't to beat the stock market because I have an ego problem. Right. I understand full well that at some point I'm going to buy a stock that actually, can you believe it, goes down in value? Okay. And many, many times that's happened and be like, that was an ill-timed buy. Fine and dandy. We're going to become an investor in that company until we can get back in the black. Just some of my deliberations, some of the insights that I give away whole, just openly on the live stream. And I hope you guys appreciate that. The delusion, I don't want you to misconstrue, because I think there is some imagination. I think there is some creativity in stock market investing that can really allow you to branch out in your application. Case in point, I'll cover the iTrust Capital Roth IRA that I have. I'm holding just a dab at Bitcoin, less than 0.5% to the total portfolio value in some Bitcoin, some Ethereum, and some Cardano. Those are the only three cryptos that I own. Just offer this as an example. This isn't, hey, go buy crypto next Monday. This is just an idea of my ability to be a little bit creative in my application, to say, you know what? I think there's probably more benefit to do than not to do. Let's go ahead and put a little strategic inject in there. Now, when I did, it dropped $300. And I was like, man, this is awesome. This is what everybody talks about with crypto, how volatile it is. Just looked at it today. I'm back up above my original investment and we're good to go. We're back in the black just by being patient, but trusting that that discipline is there, utilizing a little bit of creativity, a little bit of disciplined awareness in your approach, yes, but always avoiding being delusional in your application. I think delusion can sometimes get really out of hand. I think it's rampant across the stock market. I really think it's unfortunate, because remember how I talked about all those folks that were less than 100,000 that by nature of statistical renderings are not invested in the stock market? I would go out on a limb and say that those people are probably the most vulnerable and the ones that are the easily influenced the most, right? Those are the ones that really need to get involved with a disciplined program. And if you can block out all the noise, it's probably in your best interest to go ahead and do that anyway. You want to be focused on that multi-layer strategy. Okay. If you've got the discipline enough to say, I like what Ryan's talking about. I've got the home, I've got some equity, I've got this, I've got that, but I don't have this, this, and this. Maybe take a little bit of discipline to deploy that program as a layered approach to building a real nice comprehensive basket of buckets in your wealth building. So when we talk about the focus in on that, once you get a defined process and it makes perfect sense for you, and these are the things that he might be thinking, what do you mean by different buckets? Well, anybody can start a checking account. Anybody can start a savings account. Anybody can start a Roth IRA account. Anybody can start a taxable brokerage account. Anybody can deploy a passive strategy. Anybody can start a dividend growth strategy. I've pretty much covered all the genre of what could apply to you guys. Some of you guys might say, well, you forgot bonds. That might be fine as long as the bonds are meeting that wealth building end. See, that's the problem with bond investing is why? And a lot of people have a hard time, uh, you know, explaining why it is they're entering into bonds. Now, if your reason is wealth preservation and you're sitting on a ton of capital, and wealth growth or wealth accumulation is not your strategic goal anymore, then it can make total sense for you. But the idea is to identify all of those different multi-layers in your strategy and pick the ones that make the sense, the most sense for you. And for a lot of people, that is really just starting with the passive element. There's no perfect element out there. Okay. So have fair expectations when you're looking at applying a program. And finally, I will just say this: the key to your wealth building, if you invest in the stock market in whatever capacity you choose, through going through the deliberation and saying, what side of the house am I on? Am I a saver or am I a spender? Do I like more stuff? Do I have any stock? Am I one of the two people that Ryan talked about that, justify buying a lot of stuff in my life and I don't own any stock? Okay. Ask yourself when you get to the end of that. It's just going to tell you what the secret sauce of this whole thing is is your mental strength. Okay. It has to be your mind over the matter. Okay. And a lot of people get caught up in that matter. And I think, unfortunately, a lot of people can't answer the very simple question, why you invest. Why are you investing? If somebody comes back to me and says, Ryan, I invest to build wealth, I'll be like, now that's sharp. Can you explain a little bit more about what you mean? Because that really is the only answer. Okay. Now, for me, it's to invest for wealth to provide financial security. Okay. Because I'm looking at creating some generational wealth that means something to me. So it's an element of what I look to achieve down the line in my financial strategy down the line. It all comes down to and boils down to the ability to gain wealth, more wealth than what we have now. Okay. I'm not looking to get happier by growing my number more than what it is now. I'm not looking for spiritual actualization in the stock market. I'm not looking for that. I'm not looking for that at all, as a matter of fact. Okay. Am I looking to achieve wealth? Am I looking to achieve riches? I feel like I'm rich now, right? I commented back to the gallery, and I actually feel that way right now. So when you're applying your strategy, don't ever underestimate the power of your mind over matter. The matter being is, I can't do it. It's too difficult. This is too confusing. I don't have enough experience. I can't do this. I can't do that. I can't do this. I can't do that. And I would say this rhetorically, you wonder why the majority of people making less than $100,000, especially less than 35,000, do not justify for themselves and are steadfast in their program getting involved in a wealth building strategy. Ironically, those are the very people that need to get involved. So let's jump into some portfolios, rip this out. I was actually very, very surprised at the renderings this week. We'll throw the taxable brokerage account up here first. You can see here, obviously, some very, very large cash positions. I'm completely fine with this at this juncture. And you say, well, you missed out today. Okay, I've said this many times. I do not judge the stock market success after the renderings out of one day in the stock market. I think we may go on our euphoric frenzy just like we have over the last 12 years. I don't think there's anybody out there that's invested just anything less than 12 years who can actually have the mental aptitude to understand what it feels like to have your money go down. I just anymore, and I'm happy for you. I don't want you to be subject to a downturn to lose money. However, I do not want you to look at the stock market as just a one directional thing, because the stock market can in fact go down. It just so happens that the economy right now is very, very strong. Earnings are very, very strong. Big tech was really big this week, and that's really a large portion of what drove the market, as well as value. Value's up huge. And it's really acting as a nice supplement for me in the portfolio. But we are up week over week. Odd, we were up in every single account week over week. The overall value that I was able to glean did go down just a touch. So it was fractionally down a little bit on the total overall value. But here we are with a pretty large cash position here in the taxable account, and a few long value plays, as well as my speculative position in Hyliion. I did swing trade Wish successfully again this week. Got cold feet, exited the stock. It was the right move. Got to exit the stock up above 10, and here it is below sub 10. It's too bad too. It's a nice company. I had my options roll off, but it's just not one of those that I would like to invest in it in a lighter capacity. It's just I don't want too much speculative growth in the portfolio at this point, with a big portion of the holdings in Hyliion right now. So here's the Roth IRA one, nice, clean, myself into my own live stream. That's pretty cool. You guys get to see the behind the scenes. Give me a thumbs up if you guys got me now. That'd be awesome. This is what a green screen looks like. This is awesome. This is what I talk about when I talk about the power of social media, and it is by no means perfect. Awesome. I think I'm back with you guys. I've never had that happen. I had a little bit of a shutdown just to the computer. It wasn't a power surge, so I don't know what's going on, but hopefully I'm back with you guys. That's awesome. So I see all the questions in here. I thought I was going to lose everything. So that's awesome. I do apologize for that, but it's the power of technology, and I'm hardwired in. So anyway, back to the portfolio review, and hopefully that is good. If you guys are back in the gallery, give me a thumbs up and let me know you guys are good. That would be awesome. Otherwise, I'm going to continue and roll this out as appropriate because I think we are live right now. Let me know I'm live. Christian, you got me? The 1% didn't want you to drop the knowledge for the 90. I know, maybe they banned me from YouTube. Bob says I'm good. Thank you, Bob. I appreciate that. I don't have a boom operator here, so Verge says he's good. Let's go Hylion. Verge is my Hylion ambassador, so fantastic. So I think we are back here. So let's jump back into the portfolio review. That's kind of cool. You guys got to see what a full shutdown of the live stream looks like. That's great. But here's the portfolio, a little bit trimmed down, a lot of value in the portfolio, and really just kind of taken a little bit. I'm really curious over the next couple months how Hylion rolls out. And I think if it does what I expect it to do, it is the investment of a lifetime for me. Okay, so I don't mean to take away from the magnitude of that. It's super, super important. So what it could mean is a leveraging of the position and really taking some of those house dollars and rolling them into another opportunity. Do I think the market is going to stay on fire high for the rest of the year? Yeah, I'm not really sure. I think we may be due for a pullback at some point. You're usually wrong when you try to forecast that stuff, and that's totally fine. I'm totally good. Remember how I talked about the discipline and the application? I have a lot of buckets that are working passively all the time. And I have no problem with deploying different strategies in each of my buckets. And I don't compromise those strategies. I don't. I let them roll. That's really what gives me a lot of comfort in knowing that those are working while I'm trying to build wealth in a little bit more of an aggressive style in some of my other buckets in the portfolio. So we'll continue to do that. That's totally fine. Let's jump in here, continue on with the portfolio review. This is the second Roth IRA account. Somebody mentioned Alibaba. This is just how the holdings shake out. This is there's going to be some work to be had here, but I really want to put this portfolio on a plane. I'm going to put it on ice for a while and just monitor the position because the value that I see in the aggressive growth portion of the portfolio is really quite good. The value in the passive right now is good, but where is the upside in the total market element? We'll see. I'll win in either market. It really doesn't matter. If it goes down, I'll have a pretty good amount of pay dirt aside to take advantage of that downturn. If it continues to go up, we've got a pretty sizable position still leveraged into the market. So I'm happy. I'm happy. It's not perfect. It's just I'm happy with where we are right here. Here's one of the littler portfolios. This is the sector specialty portfolio. This is doing quite well. This is just clicked over the $5,000 mark of earnings. Not too bad for a little account. I started this with a very little amount, 1,500 or so 2 years ago. So just to put this investing opportunity in context for you, and what I was talking about at the top of the live stream with a lot of people out there that are not invested in the market, it speaks to what is possible. And I think when people look at a message like mine and say, man, I would have never thought that I could do that in 2, 3 years, 5 years. What if it takes you a little bit longer? What if you cut down on the dollar cost average schedule and it takes you a little bit more time? Why is everybody in such a rush? That's what I don't understand. And if I could go back and I was making those dollars and I heard a message like mine, it would be somewhat inspiring to say, you know what, I don't care what it renders. I'm just going to do it because it's the right thing to do, and see where we end up down the line, because I envision myself down the line looking back and saying, am I glad I started? Or conversely, if I'm down the line and I look back over my life, am I going to regret not starting? Okay. And I think, unfortunately, that there's a lot of people out there that look back and they say, man, I really wish I would have started. I came across this independent guy and he was talking about, demonstrating this is real wealth. I make this, this is exactly what it closed at today. So this is real wealth. And it kind of loses its luster a little bit when you're talking about numbers on a screen. But those are pretty serious dollars, for especially acknowledging that only 1 out of every 2 investor even owns a stock out there, or even knows the first thing about stock market investing, or hasn't gone through the deliberation of justifying it for themselves. Okay. This is the second smaller portfolio with M1 Finance. This is approaching that $20,000 mark. It's great. Now $850 away. This is awesome. What an awesome deal. This one's capital appreciation is 10 grand. So this has gone through a couple phases of the growth element with Amazon, Google, Facebook, NVIDIA, Netflix, Uber, and the like. So, and then to the ARK ETFs for a short stint. And that was the right move, getting out of the way of that train, because it went down significantly. I probably would have been fine over the long term just holding those, but I leveraged those profits into the slow growth dividend arm that you see here. And all of these 72 stocks are indeed value stocks. I chronicle those on the channel on occasion to roll those out, but we're progressing quite nice. The TSP here, this is the one that I don't touch. This again, we up week over week with a 42% year over year performance. Nothing to shake a stick at. What's possible in investing? I'm showing you. Okay. I don't have to come on and tell you, hey, that's the greatest thing ever. It'll make you feel better about yourself. If you invest, you're going to get a girlfriend out of the deal. It just doesn't work that way. This is about money. Okay. I know there's a lot of people out there that try to construe wealth building and money to being some like luxurious lifestyle out there and being happy all the time. I don't know. I compartmentalize that stuff. I really do. I think happiness is derived from a lot of different places. My portfolio, it doesn't give me joy. It's like, yeah, it's bigger. Great. We're meeting our goal. I'd like the number to be bigger next year, and 5 years down the line, and 10 years down the line. And eventually when I look to hang it up, I'd like that number to be as big as I can possibly make it when I retire. Why? Because that's the goal. That is the goal. I don't have any other goal for this gig other than to wealth build. And I hope some of that rubs off on you guys, because that's something that'll help you. Really will. Take a little bit more diplomatic approach to this gig, and you'll be happy you did. We still hold the contracts here. Everything is as declared. We own the long call contracts out to 2023 on Hyliion. Good stuff there. And then this one as well, up week over week. This is the iTrust Capital. This is really a cool thing. And I do want to foot stomp this. I don't want people to just cruise over there, but here are the highlights. Investing in cryptocurrency in a Roth IRA. If this thing blows up to 10 grand and I want to transfer it back to my Roth, I can do that. Okay. Tax protected profits, just like a Roth IRA. The unfortunate part about this is there are some account minimums to this, 2,500 being that minimum, which I think is a little steep. But I only own a half of a tenth of Bitcoin right now. And it's amazing. It went up $3,000 over the latter part of this week, and it does make a difference to the bottom line when you own 60% of it. But at least nothing else, it's of interest to show how I've split up this $2,500 bill, and we are in the black. This was down to $2,200 just one day midweek this week. So man, it's volatile. It really is. But I'm looking to take a little different approach to cryptocurrency opportunity and just become an investor. This will actually be a passive element to the portfolio, and we'll see how it shakes out in the long term. And here's the total portfolio value. There it is. It's good. It's down just fractionally week over week. It's totally fine. I'm super stoked. If you had told me 5 years ago this is where I'd be, I would have passed out. I really would have. I would have fell out of my chair and been like, I'm going to be there. How? How is that? How is that possible? On a salary way less than 100,000. I don't know, some of these people I have zero sympathy for that make all kinds of money hand over fist, whether it be on YouTube or with their day job. Shoot, man, you give me that kind of money, I'm dangerous. But there is a takeaway for you guys. If you do make your way into the Independent Investor channel, maybe there's some room for some discipline on your end as well. But I did disclose this fact: 88% of people who make over 100,000 have stock. They don't need my assistance. You can trip and fall into a Visa and succeed with it. Home Depot, don't make it more difficult than it needs to be. And the statistics back that up, that indeed a lot of our wealthier households, they get it. They get that the investing opportunity is too much to ignore, whereas a lot of people, unfortunately, do justify ignoring the investing opportunity. It's too bad. All right. So let's cruise in here, man. I want to touch base with the gallery. I thank you for that. I'm sorry for the delay, but it's no big deal. This will be, we will be going on a little stint of hiatus here over the next couple weeks, and I will be unavailable to do the live stream on Friday. So we will be back probably sometime after August 15th. This will be a couple weeks off. Take this leave. Take this leave from the channel a little bit, man. It's the best gift that I can give you. Permission to pull yourself away from social media, right? I really appreciate each and every one of you guys, and I would expect or even demand from a social media opportunity relatability. That's it. If I can't sit across from somebody and say, man, this guy's crazy, he goes on delay and shows everybody his green screen and he's a real person, that's great. But if you can't relate with the message, then don't waste your time with the message. But if there are things that you can take away, I want you guys to think about your opportunity, because I think coming into this fall, I think it's going to be interesting. We go through phases in the stock market where everybody's, woohoo, this is awesome, this is the greatest thing ever. And then quickly we turn on a dime and it's like the stock market's crashing, it's going to zero. You got to have a little bit more of a neutral application with this. Look for opportunity to take profit where you can and if you want to, and also look for those opportunities to potentially take advantage of the dip. I'm fair to acknowledge that over the last 12 years, we really haven't seen anything worth. It's been an incredible run. And that probably is a very, very specific contributor to why it is that I can come on and portray the wealth that I do, because we've been in a conducive stock market. And whether or not your bet is that that's going to continue on for the next 10, 20 years, that's totally up to you. It probably will in some capacity. My point is to kind of adjust your strategy to make sure that you enjoy those capital appreciated dollars as the market does increase. But if we do enter into a phase of more of a bear market type of situation, that you're prepared for that as well. Not necessarily just prepared with the cash buffer, but also prepared mentally, because I think, unfortunately, this market is breeding a lot of complacency, man, a lot. And the second that you scoff the stock market and think that you got it whipped and it's never going down and this is the greatest thing ever, it is over the long term. But really, it's very short-sighted to codify over the last 12 years and say that this is the totality of the stock market. The future is unknown. And it is fair to say, and I will acknowledge that the last 12 years has been kick-ass, but to say that the next 12 years is going to be like that, nobody knows that. Nobody knows. So just to have realistic expectations, be thankful for what you've got now, and establish a plan that wins in an up market and a down market as well. Okay, guys? Very cool. And cruise to the top and do some shout outs here. Here's Bob. I mentioned him at the top. He's just a awesome supporter of the channel, man. And it's just glad to have you. Got a Shunda in here who's going to catch it tomorrow. Not too much. I was kind of hoping to go out with a bang tonight, but the delay kind of set me back a little bit, and that's okay. I'll just ramp up the throttle here and try to rip through it. Yeah, we were talking about this. What is true wealth? Got Anthony in the house. Shout out to you. These are all just people representative all over the world. And I don't know where you guys are hailing from, but it sure is a neat opportunity to come on and bring people together and talk about this and really put some work charge out there. Can we improve upon those numbers? I think we can with ample education, with ample understanding of what is realistic. So I say 2 years to get to 20 grand. What if it took you 5 years? And say, Ryan, I can deal with that. Okay. That's the idea. You're starting down that road of saying, you know what? I'm tired of this vicious cycle of just always spending all my money. I kind of feel guilty when I do that. Now, those are some real internal deliberations that people do go through. I think I don't think people, maybe they do have the ability to just blow everything and be like, you only live once, YOLO everything, it's all good. I'm not one of those people. It just doesn't make sense to me because I'm happy now, and overspending on things just doesn't seem to do it for me. It's just there's only so much stuff I can buy in this life, and it starts to become kind of boring. It really does. A lot of things I can put in that category, man. Clothing is one of them, and it's just, man alive, it's such a waste. But stock investing, as well as real estate, those are those two things that are absolutely not a waste. I think the question for you and the takeaway is, in what capacity are you enjoying the fruits of each of those strategic wealth building buckets? I think it's super important. All right. This is what's up, Ryan. Happy. It's Matt. It's great to see you, my friend. Thanks for making your way in here. It's awesome. It's great to see you guys. I love doing this project. I really do. To make sure that we're coming full circle on recognizing the wonderful people that make up the community. Yeah, these are working class people who go to work every single day, and wealth building is just an element to their life, and they want it focused in on the wealth building opportunity, because while they're working on other things, while they're cooking, doing their life chore things that they do, then they want to make sure that those dollars are working for themselves, okay? Striking that equilibrium between saving and spending, okay? Hi, Ryan and everyone. Ryan, hope your family have a well-deserved vacation. It's overdue, Becky. It's overdue. This is a push from last year, so still kind of getting into that. We had to voucher everything from last year and had to come out of pocket a little bit, but this is realizing a long overdue vacation, and I've been really pressing at work. If anybody knows and has a challenging job like I do, it's very, very satisfying, man, to press for that last and cross that finish line, man, and get to a well-deserved vacation. Just makes it that much more meaningful. It really does. That's my perspective. It's great to see you, Becky, and thank you so much. I really appreciate that. We'll have a good time. We always do. Great way to wrap up a weekend of motivational. It was. I would have gotten in my zone, but my computer had other plans for me. It said technology is in no way perfect, and that's the first time that happened. So no worries. Good words at Independent. Yep. We try. As long as we're getting through to people. Fantastic. Financial options. Happy Friday. It's great to see you, my friend. Victor's in the house. Congratulations on 16. Yeah, it felt good. Man, I remember showing up to boot camp scared shitless. Literally. if you've ever heard that term, I took that really seriously, just like I take all my projects seriously. And what a life-changing decision that was for me at the time that I did it. Man alive. Some of those decisions that you make in your life come from sometimes the most dark and desperate places. And that was one of those times. And I'll always say that that decision it saved my life in some capacities, especially the mental capacity. I always knew that if I had the opportunity to make a steady income, a moderate income at that, that I could do really, really extraordinary things with income and make it into something wonderful, because I knew the power of investing before I actually rendered the profit in investing. And the real takeaway for you guys is to understand that mind over matter element of investing. Okay. It's the power of the mind. You don't need to be rich to be rich. You just have to be rich upstairs to understand what it'll take to put yourself on a path to wealth. That's the key. Okay. Here's a good one, Andres. If I made even $1,500 in passive income, I'd be happy. Although the more merrier. Sure. So there was a time in my life where I looked at $1,500 and I was like, and I got this figured out. I had the rule of 72. I had it gamed out to where if I could do $25 a month for the rest of my life for the next 46 years, I could make $1 million. And there's some truth to that. There's some merit to that. And I think it doesn't matter. Do what you can do when you can do it, because it makes sense to you to do, right? Very, very important there. I think sometimes people get caught up in these goals, and we allow the delusion of becoming something that we're not going to be able to physically make anyway. And we get frustrated when we come to the rationalization that we won't make that mark. And so we don't try at all. Okay. If by nature of you trying to invest, you're able to accumulate $250,000, maybe a savings amount of $100,000, wouldn't that be better to do that, put yourself on a plan and prove to yourself that you can do it? I think so. I think the scary alternatives, people need to face the reality of and ramification of not making those decisions when you have the ability to do that. All right. It's very, very cool. I love the video. Fantastic. Appreciate that. And I had a pretty good gallery in here tonight, man. If we can get to 50, 60, 70 people every Friday, I'm super stoked on that. It's a lot of fun. And we'll grow this project out over time. And it'll be fun to grow with you guys and grow the community of people who are interested in the message. I got Jomer in the house. Great to see you, my friend. Just some shout outs at the end of the live stream here, man. At Frame of Mind. Absolutely. Both save and spend. That's that spectrum, right? That's that balance. Now, the more money that you have, the more eligible you are to be a little bit more aggressive on that spectrum. In other words, your range of frugality to frivolous spending is wider than most. The point of that exercise was to really earmark for those people that don't make a lot of money to just self-induce some discipline, okay, and keep that continuum a little bit tighter than most. Okay, the more money you have, the more eligible you are to go out there and spend. Okay, and that's fine. But somebody who doesn't have that ability can't look at that and say, I want that. That person must be happy by doing that. No, they're just exercising their spending range. That's all it is. Okay. They've made the conscious decision at the time to make an expenditure. I'll bet there's at certain times there that a lot of people don't see that person is probably at times very, very frugal. Okay. Very important. Let's cruise down here. Got Antanas in the group here. We got Sarah in the house. Fantastic. Great to see you. She's a plank owner on the channel and a Viper at that. So it's great to have you as part of my elite group as well. It's fantastic. Got a heck of a thing going. My computer crapped out, so I need a new one. Still looking. Yeah, I might need a new one too. Now, this is brand new. This thing is a Ferrari. This Apple computer I have is incredible. More Pepsi. Pepsi's action today was fabulous. Got a couple minutes left. I do want to continue. I'm going to cruise down here and see if I can't cherry pick a good one. Here's during the frozen time. Froze. He froze. Wow. What the heck? Ryan sucks. Here's Rick. Good evening. Y'all don't stop on my account. Rick came in right at that time. That's pretty funny. That's all good. Matt says Ryan prints. Ryan does print. He prints. He prints knowledge. But you got to listen. You got to listen to get the knowledge, man, for sure. The printing, as Matt would say, is a byproduct of a well-laid plan, right? So when I realize renderings from a well-laid plan, it's not surprising to me. It's not surprising. And it is duplicated. It's scalable to the masses. You bet. I'd like to see you guys realize some of that printing, as Matt would put it, for yourself. Absolutely. But you bet. Appreciate that. Thank you, Matt. Appreciate. Make sure you guys follow me on Instagram. If you guys want to join the Facebook group as well, I do post some photos in there when I'm on vacation. If you guys want to see some cool photos of me on location, it might be kind of fun. All right. Go see the world, man. That's the key. I think the cat. It's like, yeah, it's like a Christmas vacation. Yeah, that's okay. It's just social media, man. It's all good. It's all good. Here we go. You guys were probably listening to me, and I was pretty calm, actually. I didn't go on a cussing rage. Hylion in the building and revamping their building. Yep. Nope. It's good. It's good. Going to do some exciting things. Hopefully, need that mass scale integration that I talked about as well. So we're going to continue to foot stomp. I will be releasing a video that allows people to add their comments in the comment section, and then you can just upvote the just like it. And those comments with the most votes will get posed to Mr. Healy if he does end up becoming a guest on the channel, which I think that he will. I really do. I think it'd be fun to have him on the channel. I'd like to talk to him. It'd be fun. It'd be a good time. So almost to the bottom. Very, very good. We'll close down with this, the blue collar bill. Enjoy the message tonight. Have a great vacation. I certainly will. Certainly will. I put a lot of time and effort into this project. This is one of many projects that I work. This being one of my most favorite ones. The live stream is really, it's been kind of a cornerstone within the independent investor, and you guys are part of that. I feel like we're doing something special here on the message. I really do. And as long as I'm able, and as long as I'm motivated to do this project, and I don't see that going anywhere because I just love this topic. It is the fastest 60 minutes on YouTube. It goes by super, super fast, but I just appreciate it. I couldn't do it without you guys. So be well. Have a great rest of the weekend. We will catch you in about 3 weeks. Just watch for the notification. I will post an announcement to the YouTube channel when we re-engage the live stream on Fridays. But until then, guys, be well. Think about everything that we've talked about in the first part of this 2021, and we'll look to re-engage when I come back fresh. And you know what that means. Guys, take it easy. We'll catch you in the next one.